All right, again. Yeah. Well, we're back. Thank you for everybody's patience. Thank you, guys. Thank you for your patience as we were working through that. Where we last left off is Blake was just going to show us a little bit about what he had prepared in terms of what we're expecting in the market and some data around that. So, Blake, take the floor.
Awesome. Thank you all for your patience. We have different decks that we use for different purposes. That was a bit of a stripped down one that did not contain the data that we want to share with you all today, because some of it is proprietary here. So first of all, my name is Blake Robinson. I am a broker with RDS. We are a listing brokerage for developers. And on an average year, we handle about 10 to 15% of the GTA's new condo sales. And we are here today to talk about the market a bit with a team that we love working with. And, Luke's a good friend of mine. And I'm excited to share my outlook and our outlook as far as RDS is concerned, as far as what's going on, both in the real estate market in Ontario, what's going on across the country, and how we see things shaking out over the next few years. So on this screen here, you're going to see on the left y-axis, you're going to see GTA new condo sales. And on the right y-axis, you're going to see Ontario's population growth. I mean, at a very quick glance, does not take a long look. And you can see right here that new condo sales are currently at a low. And Ontario's population growth is currently at a high. So this is creating this sort of perfect storm for the investors that have the foresight to act now with an eye towards the future. Because right now we're seeing the lowest possible pricing and the best possible incentives that I've seen in my nearly 20-year career in the pre-construction market. And this is ripe for the opportunity for it to be taken advantage of, because we're going to be able to really reap the benefits of that foresight when we choose to act now. See, what's been going on? So Canada is currently the fastest growing country in the G20, which essentially means it's the fastest growing country in the world. It's third globally in quality of life. It's the 9th largest economy in the world. And it's a great passport to hold. And it's been growing at a rapid pace for a number of reasons. Toronto is the fastest growing city in North America. Toronto has the second fastest growing tech market in North America, second only to North Carolina. It has more startups in tech than Silicon Valley. It's a world-class city in so many ways. And it's part of the reason why we chose a specific project to bring out in this particular market here with one of our developers. So if we look at this here, you'll see that in 2020, population growth slowed by a significant amount as a result of COVID. And in the subsequent years, the government has placed a huge mandate on increasing the population across the country. So in 23 alone, we added nearly 1.3 million new residents to the country, with the majority of them coming to the major city centers, like the city of Toronto, which is part of the reason why it is the fastest growing city in North America. So let's look at this here. So we looked at in the first slide, you saw that new condo sales are currently at a low. And that's driven by a number of different factors. So what this here is going to show you is how many homes we can expect on a given year. And you're going to see that over the last 10 years, we have been delivering between 15 to 25,000 condos on a yearly basis. What have we heard over the last 10 years? There's a housing shortage.
Right.
Housing shortage is all we hear on the news.
A crisis.
We don't have enough. A crisis. We don't have enough homes. Keep in mind, we've been delivering 15 to 25,000 condos on a yearly basis. Now, what this is a study from Altus Group. So this is able to track how many units will be delivered in a given year based on the amount of buildings that are under construction currently. Once a building is under construction, you're able to accurately predict how many units will come to the market on a given year. This is to the secondhand market. They'll actually be delivered. So we've been delivering between 15 to 25,000 condos over the last 10 years. Now this year, you're going to see a record high amount of condos that are being delivered. So we're 50,000 condos coming to the market this year, because real estate market was hot the last few years. We sold a lot of condos with Luke and many others. And as a result, we have more than twice more than twice the amount of the average over the last 10 years. Now, things are going to start to change. So next year, that number is cut nearly in half, with 28,000 condos set to be delivered. And you see that trend continue, where in 2026, it gets cut in half again, with only 13,000 condos that are going to be delivered. Now, where things start to get really scary and really rear its ugly head is in 2027. There are only 3,000 condos that are going to be delivered across the GTA in 2027. I mean, that's frightening.
Yeah.
It's absolutely frightening. And that is too late to change that. Because let's just say I did sell my building out overnight and I started construction tomorrow. I can't build it in 3 years. The average condominium is going to take a minimum of 4 to 5 years to develop from start to finish. So that number is essentially fixed. And in 2028 and in 2029, there are only currently 1,000 condos coming in each of those respective years. Now, obviously that can change because you still have time to develop those years. But what we're looking at is that Ontario's population growth is about to be at an all-time high, and we're about to see its condo supply at an all-time low. Now, keep in mind that condos represent over 80% of the new homes that are delivered in Ontario on a yearly basis, and they have since 2005. So back in 2005, Ontario instituted the Places to Grow Act. It used to be that 80% of our homes were low-rise, but it became less feasible to build out. You had to start building up. So this is really representing over 80% of the new home supply throughout the province, and we're about to see it come down to a very, very scary number. Now, why have condo sales slowed in such a significant manner? Interest rates. Interest rates have been a massive factor towards the confidence in both new homes and on the resale market. And we have seen over the last 20 years, really, that as interest rates come up, pricing comes down. And as interest rates come down, pricing comes up. Now, what we did see for the first time in the last 4 years, I overheard a question here, are we going to get another cut?
Yeah.
Well, we just saw our first cut in the last 4 years. And if you look at the 5 major banks, you have RBC, BMO, CIBC, Scotia, and TD. They all predicted that that first rate cut would happen exactly when it did. And they're all in line in their thinking that rates are going to start gradually coming down and that we will see them settle somewhere around 3% by the end of next year. If you are TD, who is the most aggressive, they are stating that interest rates will set somewhere around just over 2%. Scotia is the most conservative. They believe it'll be somewhere over 3%. But the consensus here is that rates are coming down. They're going to come down gradually, but we will see them start to come down now and over the next year. And what have we seen over the last 20 years? When interest rates come down, pricing comes up.
That's right.
So this is that opportunity because we're seeing right now in the pre-construction market in particular, where you're able to buy the future. And you're able to buy the future at today's price on a number of projects, which is really rare. We haven't seen that over the last 10 years. So once again, this is providing that opportunity for the investors that have that foresight to act now with an eye towards the future, because we are going to see the interest rates come down, and we're about to see the highest number of population in the province that we've seen in a very long time, or ever, and we're about to see the lowest condo supply that we've ever seen as well. The vacancy rates across the country right now are at an all-time low. It's just over 1.5% right now. Now, like a healthy vacancy rate is typically 3%. And right now we're seeing all-time lows. People need somewhere to live. Our country is growing faster than it ever has, and people need homes. And we really are experiencing a shortage currently, and that's only going to get worse. In Toronto, this number is even lower here.
Wow.
So part of the reason why we chose this specific project here today and why I'm fortunate to be in front of you is to talk about a development that I believe in personally and that our developer, Savoy Developments, believed in, why we wanted to bring this to the market here today. Want to talk about 15 of it?
Yeah, absolutely. Let's go ahead.
Awesome.
Actually, before we get into that,
sure.
You showed one thing on the chart. I think it was the chart with the supply coming into the market.
Yes.
Right. And one thing that really stood out to me when I first saw this a few weeks back is that everyone here remembers how the market was in 2021. We were just talking about our friend Jesse, right? And Jesse actually has a story, and it sticks with me until this day because of how crazy it puts it into perspective how the 2021 market was. And for those that don't know, some of you may know Jesse Law. He's on my team. And in 2020, this year, his parents had closed on a new house in Georgetown. They bought it for $1 million flat, 1.1, I think, to be exact. In 2021, when they went to go put it up for sale, they got an offer for $2.1 million. In a year, they had an offer for $1 million more than what they paid for it. That is ridiculous. But in that same year, we saw 18,000 new units be delivered into the market, where everyone remembers. You hear your family members, your cousins, your uncles, your aunts getting outbid in these bidding wars by 300-400 grand every single time. You're competing with 30-40 offers every single time. And that was in a year where we had 18,000 units. I'm just scared to see what 2027 is going to look like, right? When we saw that crazy market in 2021 during COVID, when everyone was double masked up, gloves up, you know what I mean? In 2027, how much worse is it going to get? I don't know, right?
It is scary.
It is scary. Like, genuinely, it is scary. I was just telling a couple of our insiders here that it's good for investors, but for those that may not own units yet or own real estate, it's scary.
It is. It's
scary.
Very scary. This is going to push up pricing both in the resale and in the pre-construction market by a significant manner.
Yeah.
They're just, we're absorbing units this year as far as like the 50,000 delivered now. But yeah, I mean, in a different interest rate environment, like as you mentioned, in 21, like people were taking whatever they could.
Yeah.
They were outbidding each other left, right, and center. When there is really no new supply, that's going to be huge for the existing market, for the resale market. That's for the homes that you do own. You'll be very glad that you own real estate. And we're here to provide an opportunity for those who may not own real estate yet or want to add to their portfolio, a really unique opportunity here today as well that aligns with these timelines. So everything that we just talked about as far as what's going on across the country and across the province and the real estate market is part of the reason why we chose this specific development to bring here today with Savoy Developments. So I'll give you a bit of a background on this developer because they have a number of other sites that they could have brought to the market today. And they specifically chose this particular one because they believe it's going to resonate with both first-time and savvy investors. And Savoy Developments, to give you an idea who they are, this is the condo arm of Fieldgate. Fieldgate has been in the business for over 60 years. They've built over 30,000 homes. They are one of the largest real estate families in North America. They own their own construction company. They have delivered countless buildings, including in this market here. Recently delivered beautiful buildings in Leslieville, including the Poet, along with the Heartwood and the Beaches. Those were both delivered in this last 2 years. Going to be delivering the 1200 at Dundas and Ossington early next year. And in this interest rate driven environment, we were able to achieve 91% firm sales at Northcore, which is at Yonge and Sheppard, with this developer here because they choose the right locations at the right time that makes sense, whether the economy's up or whether it's down.
Mm-hmm.
And they have a number of other projects, including 700 units in Vaughan, 750 units coming to Yonge and Sheppard right across from Melasma Square, 750 units at the Mimico Go, 1,100 units that are zoned, site plan approved, and ready to sell at Bayview and Sheppard today. We could have launched that today, yesterday, or tomorrow, but they specifically chose 1515 Pickering Parkway for all the reasons that we just went over as far as where the market's going and the population growth. And we'll talk about that right now. So we looked at how Canada is the fastest growing country in the G20. And Toronto is the fastest growing city in North America. Well, the fastest growing region in the GTA is Durham. That's specifically why we chose this project here, because we believe it makes a lot of sense with the trends around the country. So to give you an idea just how rapid the population increase in Durham has been. So right now, another very fast growing city in Ontario is Hamilton. Hamilton has more active building permits than anywhere else in Ontario. And Hamilton has added 50,000 new residents over the last 20 years. Durham has added 60,000 new residents since 2019 alone.
Wow.
Like, the population growth here is off the charts. And it's not slowing down. It's actually going to increase by a significant manner. So Durham has been growing at a rapid pace. But what has not been growing in the area is the housing supply. It has not caught up. With just under 2,000 new homes introduced in 2011, to just over 4,500 new homes introduced in 2023. Now, because the supply has not caught up to the population growth within the region, we've seen significant appreciation, both on the price standpoint along with the rental growth. The prices appreciated in the neighborhood by over 30% in the last 4 years alone. Average rental growth of 6% a year since 2018. Like, those are big numbers. When you plug that into a pro forma over the next 4 years using today's current rents and today's current pricing, that starts to look really good. And it starts to give you an idea of how these could potentially cash flow by the time that we get occupancy on this building here. So part of the reason that the growth has been so rapid in the Pickering neighborhood here is because this is a designated urban growth center. So at the start of this presentation, I mentioned about how our homes are built today in Ontario, how 80% of the new homes are condos. So back in 2005, when the Places to Grow Act was put in place, that shaped how homes would be delivered across the province.
Right.
And back when that was put in place, the government designated certain areas to target for residential growth, for infrastructure, and for employment. The three major urban growth centers that were designated were downtown Mississauga, downtown Vaughan, and the Pickering City Center. I mean, we've seen the changes that Vaughan has undergone over the last 10 years. I'm from Mississauga. I've seen it happening from the last 20 years. And I always, pose this question. Imagine if you bought in Vaughan 10 years ago. Like, how well would you have done? Imagine if you could go back and buy in Mississauga 10, 20 years ago. You would have made a lot of money. That opportunity exists today to get in at the ground level of a rising and budding city center at Pickering. And when you're investing in the Pickering City Center, you have a very qualified local demographic here as far as a captive audience in the future, with some of the highest median household incomes across the GTA, second only to Vaughan. This gives you an idea of the people that you're going to be able to rent to in the future, or the people you're going to be able to sell to in the future. It's a qualified local demographic here. So I mentioned that back in 2005, the Places to Grow Act was put in place. And this is when the mayor and the urban planners got together with what their vision for the city would look like. And this is what it looks like today. Here it is. So this is our site over here. It's a beautiful standalone building. And I'll show you exactly what Pickering is going to look like in the future.
Can we see the casino from here? No. It's more east.
Yeah, it's a little bit
more east from the site.
It's out of the screenshot here.
Yeah.
So this is what Pickering is going to look like in the coming years. And here's our site over here. And I'm going to give you an idea of some of the players that are behind the development of this neighborhood here. So this is a massive master plan community over here. There are over 50 towers that are being built in this one pocket here alone. Between Tribute and Center Court, two of the largest developers in Ontario, there will be over 50 towers in this one pocket here alone.
Wow.
Like, that's massive. That is huge growth potential as far as that's concerned. Like, there's huge advantages of investing where a master plan community is being built. It's a certain type of investment thesis where you're buying at the very start of something that is not yet built or exists. The city of Pickering has a number of other development sites over here that are earmarked for development and future partnerships with developers. So they're really forward and progressive as far as development is concerned. Now, we were very fortunate. See, Savoy, I mentioned, is the Fieldgate family. So They're the largest landowner in the Durham region.
Wow.
They have built more homes in Pickering than every other developer except for Mattamy. And they've owned this particular piece of land here for a very long time. And as we progress through this, we'll see why that's important. But the main thing is they bought it before everybody else. So they bought the site for less, which means they can also sell the site for less.
Yeah.
So that's something that we have that's a unique advantage here, because we've owned this piece of land way before any of these developers came into play here. Now, they've been selling before us because, once again, we choose the right project at the right time for the real estate market, and that's why we've been so successful with this developer here. So this image will give you an idea of how special and unique this location is within this rapidly growing neighborhood, because it's a standalone building here. And I mention that for a reason, because there's real advantages of owning in this standalone building that's next to all of this growth. See, you're able to take advantage of all of the growth that's occurring with the 50 plus towers that are being built down the street, but you don't have to live in it. See, the residents over here are going to be in a construction zone for the next 20 years. See, we're going to be able to offer our residents a little more peace and quiet, the ability to live off the beaten path a bit. It's going to be easier to get in and out of your garage. And there's beautiful unobstructed views in every single direction. See, the development across the 401 over there, they have views to the west, along with views to the south, but to the east, they're directly adjacent to commercial land. And that commercial land will not be changing. It's designated for employment, and cities need to have X amount of employment land that is designated. So that's a negative as far as the resale market is concerned. So our location really offers the best of both worlds here, where you are walking distance to all the amenities of the city center, but you're off the beaten path with beautiful unobstructed views in every single direction. And we really are right in the heart of this city center here. So we are a 3-minute walk to the mall. We are a 5-minute walk to the GO station. So the GO is currently undergoing electrification. This is a $13.5 billion investment that is going to take the train speeds from 90 kilometers an hour up to 140 kilometers an hour. That is a substantial improvement.
That's how I drive.
That's how you drive, right?
Yeah, that's how I drive.
That's how I got here in 15 minutes after you know where I was.
Love
earlier.
it.
Yes,
Love it. Love it.
Exactly.
Blake ended up in the wrong office. I guess he ripped it 149
I did
highway.
rip it about the same speed that these trains are going to be going.
Lovely.
Yeah, we'll keep that confidential here, although I know I'm being recorded. So this is a huge, huge development here, because a $13.5 billion investment is something to monitor from an investor's perspective. Like, if you follow where the government is spending its money to place infrastructure and transit, and you invest in those same areas, historically you've done very well doing so. And this is a massive deal. So right now, if you went to go use the GO train, you're going to wait half an hour for the next train. So what they're doing is not only increasing the train speeds, they are reducing the intervals at which times the trains leave the stations. So instead of waiting half an hour, it's going to be between 5 to 15 minutes, depending on which station you're using. This station here is earmarked for 5-minute intervals. So there's going to be an electric train coming in and out of the station every 5 minutes, traveling 140 kilometers an hour. That's going to take you from Pickering to Union Station in 35 minutes.
Wow.
Like, that's huge.
Wow.
So this is something that is worth monitoring from an investor's perspective, monitoring where the infrastructure is being placed. So I mentioned that we are a 3-minute walk to the mall as well. We're also a less than a 10-minute walk. This is 10. I've walked it myself. It's like 7 minutes. So 7 minutes from our site is the location of the future Durham Scarborough BRT. And this is another bit of infrastructure that is worth monitoring, because this is a dedicated bus line that will take you from this stop here to the University of Toronto Scarborough campus in 7 minutes. So you're door to door from our site to U of T Scarborough in 14 minutes. And that is huge. So this is a dedicated bus line. It is uninterrupted by car traffic, which makes it a great mode of transit. And that'll get you to U of T Scarborough in 14 minutes. And there's 15,000 students there, and there's only 1,500 beds on campus. Like this gives you an idea once again that you have a very wide captive audience available to you here as an investor. Not only do you have the growth and the appreciation and the increasing rental rates, but you have a wide captive audience as far as renter pool is concerned when you invest here at Pickering Parkway.
Outside of students, who else would you have for, you're saying captive audience, so what other type of clientele for tenancy?
So aside from, students, you have local residents. So part of the reason why I highlight our location and why it's different than everything else. So you have a population that is increasing rapidly in the region. It's a great place to live. And our building is going to be sought after on the resale market from both tenants and from prospective purchasers in the future due to its proximity to all the amenities, but also due to the fact that it is off the beaten path of it. And you're next to, brings me to this right here, two beautiful parks. Two beautiful established parks. So you have beautiful views in every single direction. Like this is going to be a desirable place to live for the local residents. And it's also, keep in mind too, the residents in Pickering right now aren't necessarily, because I'm dealing with them daily, they're not necessarily used to or ready for the density of looking at 49 other towers. So like it's great from a growth perspective, but the residents still haven't got it. Like I love density. I live downtown Toronto. Like I'm used to looking at other buildings. But the local residents aren't necessarily used to that yet. So you got a huge increasing population. There's lots of local employment, and they're going to want to live in the building that makes sense for them. And our building here really does have an unrivaled location in the area. So we are situated in between two beautiful established parks. We are a 3-minute walk to Esplanade Park and a 4-minute walk to Diana, Princess of Wales. And I mentioned the word established for a reason, because these parks exist today. Mm-hmm. So in pre-construction, it's very rare to get parkside living that is offered. And when it is typically offered, it's usually a small portion of the development that is donated by the builder to the city. And the city has to build it in the future. There's a number of developments in Markham right now that have been occupied for the last 5 years, and the park's still not done. So just like our residents don't have to live through a construction zone for the next 20 years, waiting for the master plan community to be done, they don't have to wait for these parks to be done either. They have beautiful, mature green space, it's lush, and it exists today. So they're able to enjoy these beautiful amenities that exist from the very first day of occupancy. The building that we're bringing to the market is 40 stories and contains 571 suites within it. And there's over 12,000 square feet of amenities. And this is, I think, one of the most important things to discuss. So I mentioned that this developer owned this land for a very long time. And that has allowed them to offer very competitive pricing. So it was very important for us when designing this building and pricing it that we were competitive with the resale market. So typically when you buy pre-construction, you're going to pay about 20% more than the secondhand market. You're buying the future, and as a result, you pay a premium to do so. But this is a unique case here where you're able to buy the future for today's price, which allows you to secure an asset that won't be delivered for the next 4 to 5 years at the same cost as something you'd have to get a mortgage on in the next 60 to 90 days. There's a ton of value in utilizing that free leverage that's available to you. Right now, the average condo on the resale market throughout the GTA is just over $700,000. The average condo in the Pickering pre-construction market is $650,000. We're able to undercut that by a significant margin here. Our average condo here will be $580,000. In fact, nearly 70% of the suites in our building are under the $600,000 mark. So I mentioned that we are very competitive with the resale market. So the average 1-bedroom condo in the neighborhood is $488,000. And the newest buildings that are occupying that have recently occupied and started trading on the resale market are averaging $520,000. What's unique here is that you're able to secure a 1-bedroom at our building from $470,000 mark. So you're able to, once again, secure an asset that won't be delivered for the next 4 to 5 years for even less than something you'd have to get a mortgage on in the next 60 to 90 days. And this also means that you've removed all speculation. If you had to close this tomorrow, you've done okay.
Yeah.
But you have another 4 to 5 years of growth available to you, and you have a payment plan to do so, which is something that, once again, we decided that we needed to bring something that was very attractive. And I started this presentation talking about unique incentives and the low pricing that exists today that won't be available in 2027 when there's no supply and we see things change and shift. But these are the unique things that we can take advantage of today. So this project here offers a very extended deposit structure of 15% spread over the course of 750 days and a traditional percentage-based deposit. We also offer a monthly payment plan.
Mm-hmm.
So this is something that is unique to our development here, and it's something that we're in the financial position to be able to do so, where we can take these lower monthly deposits because we have the capital and we're able to really extend this really a long way. So 1 bedrooms here is $15,000 on signing, $15,000 in 30 days, and it's $1,500 a month up until you hit 15%. 2 bedrooms, it's 20, 20, and 2,000. Sorry, for 1 plus dens, and then 2 bedrooms is 25, 25, and 2,500 a month. So we wanted to open this up to more potential buyers, to the first-time buyers, to somebody who maybe doesn't want to or can't dedicate, lump sums of cash. This is going to allow more people to get into the market, which will help address the housing crisis that we are currently under, and that will only get worse in the future. The architects behind the project here is Arcadis. This is an international level firm from the Netherlands. Due to outstanding work, you can see our beautiful architectural design here. It's going to stand out from the rest of the developments within the neighborhood. And we wanted to come with a thoughtfully designed amenity package within the building. We have a beautiful 2-story lobby where a 24-hour concierge will be located. The lobby is going to open up to a lounge. It'll have a fireplace. This will create more of a grand entrance upon arrival. We went with a large fitness center in the building as well. Everything you need in there to get a workout done. And we also went with a pet wash, a library, family play area, no pool, no sauna. We didn't want anything that would spike up the maintenance fees significantly over the life of the building. We wanted to keep things that were thoughtful and that will be well utilized. And this is what a typical suite will look like here within the building.
Beautiful. One thing I actually wanted to touch on, you just showed like a minute ago, the chart with the resale values and the pre-construction prices. There's actually a few people in this room, I won't say names, just for the sake of keeping things confidential. There's already a few of our investors that had invested in this building. And what amazes me is that there's one unit in particular that I found was the most attractive to our investors.
I know which one you like.
Was the B471.
Yes.
That one was, we had some investors tie that unit up around that 470 to 480 grand mark.
Yeah.
Although it's not a lot of money, that's $8,000 less than what's existing today.
Yeah.
But we're not closing on this for 4 to 5 years down the road.
Yeah.
So to your point about uncertainty in the market or what may happen in a couple of years, that gives us peace of mind knowing that not only are we getting it at the resale value, depending on your unit, I mean, you might be getting it less than resale value. So that, to me, that's a big game changer.
Absolutely.
That's a big game changer.
Yeah, the Sands building that just occupied recently and started trading, it's 522,000 is the average for a 1-bedroom.
For a 1-bedroom, 522.
That's what they're selling for today. So yeah, you can buy for significantly less than the resale market with, a 4 or 5 year closing available to you with plenty of time for growth. So it's, to your point, it's, one, it's removing the speculation. You're not getting a mortgage today. You're not paying taxes. You're able to utilize free leverage for the next 4 or 5 years.
And that was the Sandstone building?
Yeah.
Yeah. So, and that just closed this year, right? Yeah. So it's a completely comparable building, new build as well.
Exactly.
So yeah, that's a $40,000 spread, right? That we already had built into the deal.
Exactly. And even if you removed that building, because that's not actually figured into our average here.
Wow.
This was done prior to that building to start trading. 488,000 is the average 1-bedroom condo sale in Pickering currently.
Wow.
Yeah.
What does it work out to be per square foot?
It's
about 1,000, right?
Yeah, like we have units as low as like even under 1,000 a foot. I'd say the average of the building is probably 1075.
Yeah.
1075 is probably the average, yeah.
Mitch, the one that I like the best, the one that I just mentioned, is trading at around maybe 1010, 1015 per square foot.
Just over 1,000 a foot.
Yeah, it's like right at that 1,000 per square foot mark.
What about the parking? What about the parking
65K for parking.
for, and is it slated for all units?
2 bedrooms or larger. If you need it on a 1 bedroom or 1 plus den, just ask Luke. We'll get
Yeah.
it done.
So I have one question. If you may not like it, but in Fort York, downtown, 2 BHK, 2 bedroom is around 800,000. Yeah, if you are in this business, and here it is around 700,000, right? It's a ready-made, ready to move in, and if I have this 2 BHK in Fort York, and if I rent it now, I'll get around 4,000 per month as rental income immediately as I go. Why would someone invest here? That's my question.
I'll repeat the question just for the sake of our online audience.
Sure.
The question is, there are resale condos in Toronto
Yep.
selling around that downtown Toronto, selling around that 800,000 mark.
Yep.
Here in Pickering, we're seeing stuff trade around that 680, 690 mark. What is the benefit between resale, something that may be a little bit more expensive, but in a downtown Toronto location, compared to a pre-construction in Pickering?
Wherein, and add to
And
that,
the rent.
I start getting the rent immediately, which is around 4,500.
Yep.
The moment I own the property.
Yeah, and I
And
mean,
this ownership starts from after five years.
2028.
Yeah, 4 years.
Yeah, 2028.
So if I calculate it, so 4,000 into 4,500 into 48 months.
Mm-hmm.
It's a totally different investment thesis, right? When you're buying pre-construction versus buying resale, I mean, if you can find a resale condo, the cash flows or covers your costs, I mean, that's great. Like I'm not here to, dissuade you from doing that. I think, like if the numbers add up, like I believe in any real estate investment where the numbers add up. Here is a totally different thesis where you're buying the future. Pre-construction is always about buying the future and the growth of a particular city. And this one here is the fastest growing region in the entire GTA. So what you're doing is you're buying in at the very start of a region that is about to pop off. So it's just a totally different model. I don't think that there's anything wrong.
Maybe the right way to answer will be that the kind of appreciation which I will see in Pickering will be way ahead than the appreciation which you're going to see in downtown.
Yes,
Yeah?
and I
Maybe
think
that answers my.
for sure. I think that you'll see more appreciation here over the next few years. We've seen
Which may cover up the 48 months of rental income which you draw, or like if you're thinking long term, 20 years hence, then I think so this makes sense.
Yeah, and I think if we look at pre-construction, like you're buying on the secondhand market from someone from 800,000, they likely bought it 5 years
And
ago
it's
for
absolutely
5,
brand new,
right?
brand new.
So like that's how you are able to make that spread.
Agree with you.
Yeah.
I want to add to both of your points, actually, because you made a really great point, is that we're in this as investors. It's a completely different thesis. If the numbers work, let's do it.
Absolutely.
Resale or pre-construction. So I often make the joke that if 10 years ago you bought parking in downtown Toronto, you probably would have made about 100 grand today. Because parking, I started in real estate 2018, 2019, and parking at the time was maybe trading at 40, 50 grand.
Yep.
Today it's 140 grand.
Oh, it is 250 in Fort York.
There you go. I was wrong. 250 at Fort York. So
For the unit formerly.
even if you bought parking,
Yeah.
we would have made
Yes.
money,
Yes.
right?
Yes.
So that's it. But I don't think anyone here is a parking investor. So
No, but it helps you.
Yeah.
The unit needs it.
It's a commodity.
Yeah, it's a
It appreciates just like the condos do. Like to your point,
Yeah.
But it's something where you're buying today, you're buying the future, because you're also not paying taxes on it. You're not getting your mortgage today. And right now, nobody wants to get the
No,
mortgage.
but your the payment structure is very exciting.
Yeah.
It's very really ebullient. The way you have structured the assignment is also a good attraction here.
Yes.
So if you have to invest, I think it makes lots of sense. And plus, it's a brand new building which you're getting in an area where the population growth is going much faster.
Absolutely.
Question.
How much are the competitors selling for, like the ones that are in the downtown area there?
So the average condo in the area is 650. If you go check out any of the competitors, we're like, I don't want to like name them. I'm on camera here, but we are lower than everybody else.
Yeah.
Yeah. And Luke can help you
And
show
they-
you
and they've
a
already
competitor
started?
price list.
Yeah.
They've already started construction on theirs, right? Those other sites have already.
There are sites that are under construction. Yeah. So, There's some that are under construction. There are some that are still in the pre-construction phase.
But they have sales office or?
They do, yes, in the neighborhood. So
I'm intrigued to ask one more question. Is there any study of trend between, let's say, Oakville, Pickering, and downtown? What is any location in downtown? What is the trend over last 20 years? The price increase which has happened. Suppose if I would have bought a condo maybe 10 years back in Pickering, in Oakville, and then downtown, quote your quote example. What is the trend analysis last 10 years where the highest return for your money has come from? Any idea on that? That will help me to take the right decision.
Yeah, so for the online audience, the question is, what is the price trend in the
These three areas.
Oakville, Pickering, and Toronto areas?
Toronto, maybe you take it for the ease of understanding, for job.
Yeah.
I mean, average appreciation over a 20-year span throughout the GTA has been about 7% a year.
Okay.
Yeah.
Pickering's gone up by 31% over the last 4 years.
So CAGR, compounded annual growth rate, is 7% in the GTA.
Throughout the GTA over the last 20 years, you've seen about 7% a year.
Yeah.
7% a year, and in downtown.
That encompasses the GTA.
Okay.
Yeah.
So it's same all across the.
Across the GTA, you can expect 7 to 8%. You know, some areas will appreciate at a higher rate than others, but just like I don't have a breakdown of what Oakville is versus Toronto. But across the GTA over the last 20 years, we've seen 7 to 8%.
Yeah.
Fair enough. And what would be the rental income if I have a property in Pickering? 2 BHK in Pickering?
I mean, right now,
Sorry, and
Sure.
again, the question now is, what is the rental income looking like in Pickering?
1 bedrooms are trading around 2K right now,
Sorry?
around 2,000 a month.
2,000.
Yeah.
In Pickering.
Yeah.
And Oakville, I'm not aware of that. Oakville?
Oakville, I believe, is closer to that 22 mark.
Yeah, it's a little more.
Yeah.
Two bedroom. Okay.
It's a little more.
Wait, for a 2-bedroom?
Yeah.
No.
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 No, 1 bedrooms.
For a 1-bedroom,
I'm talking
22.
1 bedroom.
2 bedroom in all 3 places. I just want to have it.
I don't have the 2-bedroom figures off the top of my head.
1
1 bedroom, you're looking around 2K for Pickering currently. 25 area.
He's
2-bedroom.
speaking from experience.
2,500 for a 2-bed in Pickering. And okay, no, Oakville? No.
Yeah, I don't really know Oakville's figures. No.
Thank you.
And so you had a question?
Not a question. I was just going to make a statement because he was trying to decide whether Pickering is a good area, and I had a personal experience where I bought a pre-construction condo in Pickering, and I was saying at the table at breakfast how the return was phenomenal.
Wow.
Phenomenal.
Wow.
Over 200K pre-construction, closed it on an assignment, and I just can't tell you how. And that was last year.
Okay.
Oh, last year you closed on it?
Yeah. I wish that person loved closing a mortgage on it, but.
Wow.
Congratulations.
Yeah.
And you know what? Like kudos to you.
Yeah.
That's what we are here talking about. It's that foresight to invest for something that won't be built for the next 4 to 5 years.
It was
It's
a
hard.
2020 purchase.
No, but
2020 purchase.
she's
Yeah.
absolutely correct. You know what happens is that universally, globally, the growth rates, the CAGR I'm talking about, is always higher on the surroundings like Pickering or all these which is surrounding this center, because your population will always have more purchases because of the newer areas coming up.
Yeah.
And obviously the population also tends to move out of these areas. Typical example is airports are always built outside the city. After 20 years, you find them in the middle of the city.
Mm.
Yeah. So I think Pickering stands. The future is there. So I think it's lots of. It makes sense because the appreciation itself will be the higher.
Yeah.
Will be higher.
So when I was asking about
Good points.
Tennessee before, I was just wondering what else is in the area other than it's close to a close ride to the university. Like, are there hospitals? Yeah, I can't picture everything. I actually never even visited this.
My favorite place is the casino. My favorite
The
place.
pick, yes. The casino is one of the largest employers in the city. Porsche is actually building an experience center in Pickering
Yeah.
currently. That'll be delivered in the next, around the time that we occupy here.
Yeah.
There's a lot of investment that's occurring. I mean, you've got, obviously, the Go is a big employer as well. Metrolinx, and with the investments that are occurring there, you'll see even more employment as well. You have designated employment land across the street there. You have factories. There's a number of employers within the area. Like the household incomes are high.
Yeah, I
You know,
saw
they're-
that 118.
Yeah, like there's 6-figure household incomes is good. And so I think that you have a population that's increasing, but there's already a good a good base with strong numbers existing. And so I think like the student rental is just like why I bring that up, because that's just a bonus. That's a bonus, and it's going to be a desirable building that will be a hop, skip, and a jump once that BRT is built.
We have a question from Mitch on this side.
So if you can go back to the financing slide,
Which one, sir?
the one with the breakdown of the deposits.
Sure. I can actually I have physical packages here for you with our exact deposit structure on them. I can hand those out to
I
you.
find it's quite generous, actually. How can you afford to spread that cost out so long?
So one of the things that is unique about here it is, and that's why I brought it up earlier in the presentation. It's like they've owned this land for a long time. That's why they're able to offer it at the price point that's less than everybody else in the neighborhood. And as far as financing is concerned, I mean, we're able to spread this over the course of 750 days. So choosing the right developer in this market is more important than it's ever been. And Fieldgate's been in the business for over 60 years. When you're in the business for over 60 years and you built entire subdivisions, you built over 30,000 homes, you have better financing rates with the bank.
Mm-hmm.
And that's really important. They're able to start construction with less financing, and they're also able to achieve better rates as well. And they're able to offer more flexibility like this, where you can collect 15% over the course of 750 days. Not every developer is going to be able to do that.
Yeah, no, it's quite generous,
No.
especially the monthly payments too.
The monthly payments, yeah.
It's cheaper than occupancy for sure.
Yeah, it works out to be like 20 plus months
Yeah.
the checks go over,
Yeah.
something like that. Yeah.
So
Yeah.
we could buy this and basically when it's constructed, just flip over to the free assignment.
Absolutely.
Based on the fact that there's going to be a shortage of inventory.
Absolutely.
This year is brutal because it's just oversupply right now. But that's going to get weathered over the next 2 years at least, right?
Absolutely. There's 50,000 condos that are being absorbed this year. That's why Lou Academy here today is really to just talk about what's going on across the market in the GTA. And yeah, you're right. This year, I mean, like, congratulations to you for doing so well as far as appreciation is concerned, especially in this market, because there are so many condos that are still yet to be absorbed. We had such success over the last few years. Toronto is the building crane capital of North America.
Yeah.
There's over 150 active building cranes over the last 4 years on average in the city of Toronto alone. There's a big reason for that. Toronto is considered the pre-construction capital of North America and really of the world.
Up the road.
And because if you look at the way that our banking system works, so we have the most stable banking system in the G7, and we have for the last 13 years running. And that's a huge reason that we're able to sell real estate the way that we are here. See, if you go to other, major cities in North America, like for instance, LA or New York, pre-construction is a totally different thing there.
Mm-hmm.
So over 80% of the real estate there is owned by pension funds and large families, because the way their financing system works, and it has since 2008 when they hit the collapse, because they were giving out mortgages left, right, and center.
Right.
These huge amortization periods. So the way they finance it is completely different. If I'm selling a building in New York or LA, I need to have my roof up before I can sell a single unit.
Wow.
That's why when you're watching $1 Million Listing, you're watching Ryan Serhant, when they're talking about a new condo, it's always just an empty condo that's already built, and then you can spec it the way you'd like. See, that means you remove the investment component for the average individual. Because if I'm taking the keys there, I'm taking the keys within a year. I'm not buying appreciation at that point.
Yeah.
I'm buying something that I'm moving into,
Yeah.
right? So the appreciation is realized by pension funds and large families, where here individuals are able to create wealth through pre-construction because we're able to collect deposits, and you're able to put your deposit down with the builder, and then realize that 5 years later.
Mhm.
You're able to realize the growth of a city. That's why pre-construction in the city of Toronto and the surrounding areas is really unique to this market alone, particularly in North America.
Well said. I'm sold. I'm sold.
Yeah.
Question on the side?
So I was just looking at when you did the comparators of where the built in Ontario is. Like, so you're like selling in Pickering. There's also the markets in Vaughan, which is more mature. You have like the subway and GO and Via Rail already built there. And then there's also Mimico, which it's on the east,
Yeah.
southeast corner, also getting developed, like with the new Gardiner and everything. And of course, there's also beyond that, Saga, and you mentioned Hamilton. So how does Pickering compare with all these other options that we have right now? And I'm pretty sure everywhere in those areas, I could find a pre-construction. Right?
Absolutely.
Right.
Yeah.
So how does like the Pickering area like compete with all those? Because a lot of those are already built infrastructure,
Correct.
and there's already commercial areas in there. So yeah.
Yeah, I mean, so like it's just different. There's different investment theses. When buying pre-construction, we reference Vaughan and Mississauga. I mean, so the thesis here is buying in at the start, right, of an area that is taking off and that's being built rather than an area that's already built. See, if you bought, like, there's a great pre-construction example in downtown Mississauga, M City, right? If you bought at M1 versus M6, you made a lot of money.
Yeah.
The purchasers of M1 are looking at those M6 price lists like, wow, I've done very well here.
Yeah.
There's different reasons. You could buy in an area where there's a lack of supply of new development, and maybe it's the first development in a neighborhood, and that's one thesis. And I love those as well. I have, I sell pre-construction for a number of developers, and I have a bunch of different opportunities, throughout the GTA currently, and different ones have different attractions to them. The attraction to this here is about getting in day one in an area that is taking off from, population, investment, and infrastructure and transit. Like some of the things that, to look at where, like, yes, does the, infrastructure exist in some of these places here? Yeah, they do. Right? Here the GO exists, but it's getting a $13 billion investment as far as the electrification. Buying before those things happen tends to yield results as far as appreciation is concerned in an area that's already appreciating and is shown to do so by the rate of 31% over the last 4 years.
What's the interest on the deposit?
It's currently like 2.95.
Okay.
It fluctuates with the Bank of Canada rate.
Right.
So yeah, hopefully it comes down again and you collect less interest, but the interest rates come down.
Around 3%.
Yeah, around 3%.
My second question is that since this project completion is for 4 years,
Yes.
so in between, if there are certain uncertainties which comes up and certain appreciation of raw materials which you use to build up, so is it price locked, or it is you have would you increase the price basis the increase in the raw materials you're using, or is that final price locked?
Yes.
The purchase price locked?
Yes, it is.
Purchase price is locked.
Your purchase price is set in stone the day that you firm up your agreement. So when you buy pre-construction, you have a 10-day conditional period to make sure you're happy with the agreement, have a lawyer review it. And after that, when your agreement is firm, your purchase price is set in stone for the next X amount of years until we deliver it and when you close on it. And at that point, you're able to realize the returns.
We'll take one more question. One more question. We're all good? Last question.
So out of curiosity, how far is this from the power plant?
Eva, do you know how close we are to the power plant? What's that?
It's pretty close.
It's very close?
But it's the other side of the highway. Liverpool, yeah.
On the
I think so,
on
yeah.
the other side of the 401. Well, I mean, we're 115 feet from the edge of the highway to the edge of our site. So, I mean, there's a pretty good distance there. Yeah.
There you go. Awesome. I hear stomachs grumbling, so we're going to get back to eating. If anyone wants more information on this opportunity, Eva in the back here, she has a handful of packages. Feel free to ask her questions. Blake's gonna stick around for a little bit. But yeah, Eva does have packages for you guys to grab on your way out. Thank you, Eva.
It's totally up to you whether you want to buy parking or not. The benefit of having parking, like Luke mentioned, is that they appreciate just like condos do. No. So to give you an idea, developers lose on average about $200,000 for every parking spot they build underground.
Oh,
So
wow.
they're always going to build less than the city would like, and the city is always going to ask them to build more than they would like.
Is the parking underground for this?
We have both below and above grade parking. The above grade parking will be sheltered, and along with the below grade parking. So we have three levels.
To what, though?
3 levels of above grade and 2 levels of below grade parking.
And the above grade is available to.
It's available to purchase as well.
Anyone can purchase. Any.
Two bedrooms and larger. But once again, if you need it on a 1 bedroom or 1+ den, we do still have a good amount. We can sell you parking.
Yeah. All right, thank you, everyone. We're gonna get back to eating and networking outside, so grab some food. We have a lot of food. Thank you, guys.
Thank you all for your time today.